We've seen the FCMB and Fidelity Bank public offers in their efforts to mop up cash to meet up with the new bank consolidation requirements. These two companies have similar share prices, so from an investor point of view, if we want to buy shares at this time, which one should we buy based on the historical performance of these two companies on the Nigerian Stock Exchange? Before we start, in this video, you will hear me talk about FCMB's dividends per share being more than their earnings per share for year 2019. Turned out that there's an error on their website. They switched the two numbers. Look at it. FCMB Group, shareholder information, dividend history. Dividend for 2019, 87 kobo per share. Earnings per share, 14 kobo. Thanks to Elijah that sent me a press release they made for 2019 showing the correct figures. I also dug into their financial reports for 2019 and indeed, these two numbers were switched on their shareholders page. FCMB, update your website because this error makes it look like you paid shareholders out of pocket, which is not good for a company. I'll put the links to the two previous videos talking about these public offers below. Now, let's go and check. Let's bring out the spreadsheet. The spreadsheet will call the results. So this is the result of the investigation I made on FCMB to know how they are performing. I did this for the past 5 years. Look at their average share price for the past 5 years. It was 180 in 2019, average for the year 210 in 2020, 305, 330, 540. So it's increasing a little bit. I mean, in 2023, all shares rose towards the end of the year. You guys, we know what happened there. We're not going to talk about friends helping friends here. And then the earnings per share of the company. This is the amount of money, the profit that the company made. You get the total profit they made, you divide it by the number of shares they have now, and yeah, that's what you get. In 2019, the earnings per share they made, the money they made in the company was 14 kobo per share, their profits. In 2020, 98 kobo per share, it's rising. 2021, 1 naira and 5 kobo per share. 2022, 1 naira and 56 kobo per share. And then in 2023, it rose to 4 naira and 70 kobo per share. The dividend they paid out in 2019, I don't know what happened in 2019. How can you make 14 kobo and you paid 87 kobo per share as dividend? So you dipped your hand into your pocket and paid your shareholders. No, that's not a good sign. A company, something must have happened there. Does anybody know what happened in 2019 that FCMB had to dip their hands into their pockets to pay their shareholders 87 kobo when they made 14 kobo per share in earnings? Please, if you know that, explain that to me. And then in 2020, when they made 98 kobo per share, so they paid 15 kobo per share. This is probably when he was talking about 100% increase year on year. It's actually not every single year. Just between 2022 and 2023, that's when they achieved, because they paid 25 kobo in 2022 and paid 50 kobo, which is double of what they paid in 2022. So I guess that's what he was referring to, because obviously from 2021 to 2022 is not 100%. If you look at the dividend yield here, you will see that the dividend yield for 2019 was 48%. So you made 48% profit by leaving your money with FCMB, which does not, like I said, something happened during that year in 2019. Something happened. This is out of the ordinary. The best paying companies will give you 10%, 12, 14% dividend yield. This is outrageous. So something strange must have happened there. But if you come to the rest of the years from 2020 to 2023, you see what is their typical dividend yield. This is based on what their share price is for that year, their average share price for that year, which is technically the amount of your money you have in that bank for that year, and then the dividend that they paid you. So you use that to calculate that. So you can see 2020 is 7.14%, 2021 6.56%. So that shows that typically their dividend yield is below 10%. You guys have seen on this channel where I analyze other companies. This is below par. I don't even touch any company that pays less than 10% dividend yield. This is what I was talking about when during the introduction, when I was talking about the fact that it's not just about saying that your earnings are increasing and your dividends are increasing. What is the relationship between the earnings and the payouts? That's very important to an investor. Yeah, the dividend yield for 2023 is shy of 10%, but we have seen better on this channel, haven't we? And then the dividend payout ratio. The dividend payout ratio is the ratio of, or the percentage of, their earnings that they paid to their investors. You can see that I put it in red. If it's red, it means that it's not good for me. Again, look at 2019. It's 621. There's something going on with that year. Yeah. So they paid more money than they made to their investors. It doesn't look good. And for 2020 to 2023, actually, it's decreasing. 2020, they paid 15%. 2021, it increased to 19%. And 2022, they went down to 16%. And then last year, they paid 10%. Yeah, it's decreasing. This is the relationship between what a company is making and what they're paying their investors. This is an indicator of a stingy company association. And then the PE ratio that he was talking about, like I've explained in previous videos, you want this figure to be as close to 1 as possible. For instance, for 2023, their PE ratio was 1.15, which means that for you to make 1 naira in FCMB, you would have needed to invest 1 naira 15 kobo. If you calculate this PE ratio for a company and you're getting like 10, it means that you need to invest 10 naira in the company to make only 1 naira. So it's not a good investment. So the closer this figure is to 1, which is why he was using it to brag in his presentation, well deserved. In 2020 it was 2, still low, and this one 2021 was almost 3, still low. You've seen us calculate it here for some companies and we got 7, 10, 11. Yeah, even though their dividend payout ratio is low, it can be better. Yeah, their PE ratio is quite good. Let me compare that to another company. Guess which company? Fidelity. Look at Fidelity, all green, 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 green. Yeah, look at their average share price over the past 5 years. 1.85 in 2019, 210 in 2020, up till 7 naira something in 2023. Again, it shouldn't surprise you, all the shares went upwards this last year. So that's why you have that huge jump from 2022 to 2023. And then their earnings per share, 98 kobo, 92 kobo, 80 kobo, 1 naira something, 3 naira something. And then they paid dividends of 20 kobo, 22 kobo, 35 kobo, 50 kobo, 85 kobo, giving you a dividend yield of above 10% for all the years, all the 5 years. You can see that they're in green, they're all above 10%, with the highest ones in 2021 and 2022. Fidelity, why did you slack in 2023 now? I'm assuming that if you bought the shares last year, this is the amount of money you invested in the company for that year. Dividend payout ratio, which is the percentage of their earnings that they paid out to their investors. There's a promise on Fidelity Bank website. Let's read it together. In the last 5 years, dividends have moved within the band of plus or minus 70% of 30 kobo per share. The bank's composite risk rating is sound and does not preclude it from paying more than 30% of its net profit. Currently, Fidelity Bank's guidance for dividend payment is between 25% and 40% of annual net profits. So this is what they use to calculate the dividend that they will pay you. So let's go back to our spreadsheet to find out if they're actually keeping to this promise. Yeah, you see, the dividend payout ratio is 27% for 2023, 31% for 2022, 43% for 2021, 23.91% for 2020, and 20.41% for 2019. That's a good bank that has the interest of its shareholders at heart. It's not a stingy bank. It's not a stingy bank. And because their rating is good, they are allowed to pay more than 30%. Because if it's a bank whose rating is not so good, they are restricted to paying only 30%, because probably they've rated them and seen that if they pay more than 30%, they're going to go under. They're going to disappear in 2 days. And check out Fidelity's PE ratio. Yeah, it's quite low, 2.29, 2.14. So you need to invest 2 naira 29 kobo in Fidelity to make 1 naira. You need to invest in 2022, you needed to invest 2 naira 14 kobo to make 1 naira. 2021, you needed to invest 3 naira to make 1 naira, and so on. What do you think? Is it looking good? Is FCMB looking good? All these banks that start with an F. Is FCMB the new Fidelity? Is it looking good? If Mr. Balogun can promise us that he will increase the dividend yield and increase the dividend payout ratio, maybe we can jump on this bank. When are they even closing? September 4th. So there's still time. Mr. Balogun, talk to us. Give us an incentive to invest. It's not about this is increasing. It's the interaction, pari passu increment that we want. Let me know what you think. Are you buying? Are you a shareholder of FCMB? What do you think about this offer? Bye bye. See you in the comments.